Very good morning and a happy Friday, everyone. Welcome to today's episode of Morning Wealth. Do hit the like button and leave a comment on what you think of the podcast. I look forward to hearing some feedback. Three things that we can look to here: Fed's bank results, worrying rise in COVID-19 cases in the US, and Nike's results. Equities consolidated on Thursday as the deluge of negative COVID-19 headlines were overshadowed by the reports that US regulators will relax the Volcker rule and allow banks to increase investments into venture capital funds and free up capital that would have otherwise been dedicated to derivative trades, which is they scrapped a requirement that lenders hold margin when trading derivatives with their affiliates, potentially freeing up tens of billions of dollars. The Fed also capped dividends and banned buybacks at the biggest US banks through at least the third quarter. The industry performed well in annual stress tests, but a separate review of the effects of the pandemic uncovered some potential risks. On the back of that, most banks were lower in post-market trading after earlier leading a late rally that left the stocks up more than 1% despite the rising infections and the mixed bag of data. Treasuries were little changed, the 10-year yields hovering around 0.69%. Dollar was mixed against the G10 counterparts, with the Aussie and the Kiwi among the gainers. Oil and gold edged up. Nikkei futures are advancing while Hang Seng is retreating. Currencies extended their slide on Thursday after US reported its biggest increase in COVID-19 cases ever. Despite Trump administration's attempt to downplay the risk of a second wave, the numbers tell a very different story. New virus cases in three most populous US states hit record highs this week. While the death toll remains low, the spike in fatalities typically increase closer to the 2-week mark. As much as the politicians may be trying to deny it, the curve is actually moving rapidly in the wrong direction. The president and the governors who rushed reopening don't want to reverse the reopening process, but Americans themselves may choose to tighten their own quarantine measures. So if you look at high frequency data like restaurant reservations in California, Texas, Georgia and Florida have plunged in the wake, and more declines are expected. We got the jobless data also yesterday. The labor market's recuperation is taking longer than foreseen. Initial jobless claims fell last week to 1.48 million, worse than the 1.32 million that was expected. That leaves a total of new filings since mid-March above 47 million. Continuing claims, which is reported with a 1-week lag, slipped to about 19.5 million from a revised 20.3 million. Data to look forward to today, which is Friday, is America's personal income, which probably dropped by 6% in May after rising about 10.5% in the previous month. Personal spending is expected to rise about 9.1%, rebounding from an April's decline of 13.6%. On the equity side, Nike fell in late trading after its fourth quarter loss per share of 51 cents was substantially worse than the consensus for a profit of 10 cents. The company said the results were significantly impacted by store closures, and shipments to wholesalers fell by half. Wirecard filed for insolvency proceedings, a first for a DAX 30 index member. The German payments company's main banks may face losses of about 1.6 billion euros. Shares fell as low as 2.5 euros. The stock hasn't hit zero for technical reasons, one of the securities firms said, as options and short positions need to be unwound. Lufthansa won shareholder approval for a 9 billion euro bailout from Germany, including the sale of a heavily discounted 20% stake to the government, which would take place in the next few days. Lastly, on the Forex, the greenback got a safe haven bid that helped extend its gains against the euro, the Japanese yen and Swiss franc. Australian and New Zealand dollars were the best performers. Australia reported its largest drop in job vacancies for the 3 months to May ever. Euro fell more than the sterling despite a big improvement in Germany's GfK Consumer Confidence Index and a smaller improvement in UK CBI retail sales report. That's your update. Stay safe and healthy, everyone. Have a lovely weekend, and I'll catch you on Monday.